Why the special dividend?
Well, we had a dividend policy of raising our dividend by 5%. We want to make sure we can do that across the cycle. And we had pulled forward some earnings, anticipation Solvency II in the UK, and those earnings belong to the shareholders, so we distribute them out.
On the Asian proposition, can you just give us a sense of what the shareholders can expect over full year 2016? Because as we know, the shares have been beaten up a little bit. People have been, I think, sort of writing down expectations from you on the weaker China growth outlook. Just fill in the blanks for us here. How strong or otherwise do you think China is going to be this year? Well,
I think China and Asia in general are misread by the West. I think first off, the data people use is GDP, which is too high level for the middle class. We're not trying to buy the market, if you will. We're not investing in all of China. We're doing business with just middle class consumers. Disposable personal income in China rose 9% last year, 11% Malaysia, 6% in Indonesia. So well ahead of the GDP levels. So the consumers have money, are spending. Airlines are up 9%, telecom, department stores, all of the key metrics around our average client. So they're very resilient. And if you think about our business, it's a risk-off trade. So in these sorts of times, we see tremendous growth. We had 30% growth of sales in the fourth quarter.
Let me ask you about savings products then in Asia,
yes.
Because you made some comments last year about the volatility in stock markets, particularly China, was actually positive for some of these savings products because the rush into safety was what was encouraging the middle class. Has it happened again this year as you start out 2016? People want the safety of some of these products?
Well, again, look at that fourth quarter, up 30 on sales. This is the structural demand for consumers in China and Indonesia, Malaysia, all the Asian markets is intact. You have alignment with the political class. You had the finance minister on. They actually have a target for insurance penetration in China because they want those sort of financial events not to disrupt both social or political or financial outcomes for consumers. So there's tremendous need there. I think if you travel China, you find that the market is seen as much more volatile and much less government supported than an average consumer may have anticipated. And so yes, they're going to long-term conservative savings products, but so is protection. Our protection was up 90% last year.
What's been the impact of all sorts of moves on the RRR and on the interest rate? Is that having an impact on your margins across some of these products?
It's not. Since about 07, we have worked pretty hard to get away from interest-sensitive products. The part of it's the market's done that to you. The spread business at these absolute rates makes less and less sense, and the demand for a consumer for locking in these rates is lower. So part of that's just market, and part of that is a strategic decision on our part not to participate in that space.